Welcome to the Transparent FX Academy. My name is Nick and I'm a top hodler on TradingView. And as a top hodler, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. The pair that I want to speak about today is CHF JPY. The reason for which I want to speak specifically about CHF JPY is because the market has just completed the pattern that we wanted to see the market complete. So now we have new price action and structure, which obviously we have to discuss if we are to be looking for the next opportunity that we can be looking for on this pair. Now, as usual, I will keep the analysis as educational as possible. First, we will be speaking about this pair from a technical perspective. I will then go and see what we have from an order flow perspective by looking up the COT data, which is the commitment of traders. So what hedge funds are currently doing in the market. So both from a CHF perspective and a JPY perspective, because obviously if you're able to understand what institutions are doing in the market, you have an advantage over your competition for a more profitable trading. So without further ado, let's get straight into the analysis, and I will keep it as educational as possible so that by the end of the video, not only you will know exactly what kind of opportunities we can be looking for on the pair, and you will also have an update on it, but you will also have learned, obviously, some very important concepts when it comes to trading in general. So let's start from the monthly time frame. What do we have? Now, from a monthly perspective, we have a market which currently is testing a strong area of previous monthly resistance, which is now turned monthly support at this zone. We also see that the market has created a strong impulse in breaking above this resistance. And as you know, previous resistance, after it is broken, it is turned support. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And what we can see by doing this is that the market retraced exactly to the 50% of the Fibonacci taken on the impulse, which was the Fibonacci level lining up the best with this previous monthly resistance, which is now turned monthly support, creating a confluence of support, which the market has tested and from which we do expect the market to create a rejection to the upside. So on the monthly, everything is clear. We have previous resistance, turn support, which the market has already tested and started to reject to the upside. Going down on the weekly, what do we see? Now, on the weekly time frame, we see very interesting price action that we have already spoken about in our previous analysis. In fact, we have a market that has already provided two M formations. Now, in general, after an M formation, if you want to be looking for the completion zone of the M formation, it is exactly the previous support turn resistance, which is the neckline of the pattern. So the previous support, turn resistance, and the completion zone of the pattern. And what we had here was first this M formation, which completed at this zone here, which was the completion zone of the pattern. So the previous support, not turn resistance. And that is exactly what the market did. From the low, the market completed the M formation at the neckline. And then again, we had the creation of another M formation right here. Up, and down. And after this M formation again, what do we expect? We expect the market to complete the pattern again at the previous support, which is now turned resistance. And again, that is exactly what the market has done. The market created the move to the upside and completed the pattern at the previous support, not a resistance, which is the neckline of the M formation, so the completion zone of the pattern. So we have two M formations, one after the other, that have already completed at the neckline. So currently, since the neckline is a strong area of resistance when it comes to an M formation, we have a market that from a weekly perspective is testing a strong weekly resistance area. So this previous support now turned resistance. Going down on the daily, what do we see? Now on the daily time frame, situation is very clean. We have a very clean price action. Now we had spoken about CHF, JPY quite a few times in the past. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a trading opportunity in next video. In fact, I spoke about CHF JPY when the market was here, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create a nice move to the upside, and that is exactly what the market did. Then I spoke about CHF JPY after the market had provided this W formation, and I made a full breakdown explaining all the reasons for which after this W formation I wanted to see the market complete the pattern at the neckline, aka the previous resistance, which is now our support. And again, that is exactly what the market did. Then we spoke about CHF JPY after this overextended M formation. I made another breakdown explaining all the reasons for which from here we wanted to see the market create a move to the upside to complete the overextended M formation at least at the 0.382 of the Fibonacci taken on the impulse. In fact, in the case of an overextended M formation, you want to see the market create a retracement at least to the 0.382 of the Fibonacci taken on the impulse leg. And that is, in fact, exactly what the market did. And with the very last analysis on CHF JPY, we spoke about the fact that the market was creating a W formation testing the weekly resistance that we have already spoken about. So we had clearly a strong weekly resistance area with a daily W formation testing it. So I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside that the market has just provided. And I will link in description all this previous analysis so you can go and check it out for further reference and more free education. You find everything linked below. But at the moment, what is the situation and how we can be looking to capitalizing on the next move of CHF JPY? Now, if we go and see what we have from a COT perspective, what do we see? Now, on the CHF, what we can see is that hedge funds with the last report have closed 1.4K long positions. So they weren't really interested in this long. So that was a good confluence for the move to the downside that we wanted to see. And in fact, that is exactly what the market has done. And currently, we don't see any kind of proper bullish price action yet. So we can expect that hedge funds, at least at the moment, still haven't added any proper longs on the CHF. Actually, probably they added some shorts. And if we go and see what we have from a JPY perspective, we can see that overall net positioning is quite high. However, what did we see? We have seen this week in the market both gold and the JPY plummet to the downside. We have seen massive capital getting away from these instruments. Because as you know, gold and JPY are instruments at which investors look to in periods of uncertainty as a safe haven. And we have seen JPY and also gold plummet to the downside this week, which means that obviously investors are taking their money away from them. So at the moment, we can expect some more JPY weakness, which should make CHF JPY make a move to the upside. So how we will be approaching this kind of situation with students? Now, first of all, the new CRT report that will come out on Friday will definitely help. But until then, what situation do we have from a technical perspective? Now, at the moment, what we do know is that on the daily, we have previous daily support, which is now turned resistance here. That is for sure. And what we also know is that at the same time, we also have support here, because this area here, which is the neckline of the W formation that we wanted to see the market complete, has just completed, and a neckline for the definition is an area of previous resistance, not our support. So this means that at the moment we have a market that is trapped in between daily resistance and daily support. And until the market will remain inside of this range, we cannot be looking for any kind of opportunities on it. So how we will be approaching this kind of situation with students? Now, until the market will remain in this range, we will not be looking for any kind of opportunities because we don't have good probabilities nor a good risk to reward. And as you know, trading is all about probabilities and risk to reward. So only if we will see the market, for example, break this area to the upside, only at that point we would have a good probability and good risk to reward on this pair. Why? Because a break to the upside would make monthly, weekly, and daily timeframes all align for the move. However, trading is reactive and not predictive. So only after the move to the upside or to the downside, or any kind of break away from this range, only at that point we will be looking for any kind of opportunities on CHF JPY. And obviously, I will try to keep you guys updated on all my platforms on the situation that will develop on CHF JPY. But until the market will remain in this range, is too risky to be looking for an opportunity. So it's always best to know when it's time to stay on the sidelines. And in this case, on CHF JPY, it's best to stay on the sidelines until we will see a break either to the upside or to the downside that at that point would bring a good trading opportunity. And obviously I will try to make an update as soon as that happens if I get your support as usual. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.